Well, hello folks out there in YouTube land. Got a big show lined up for you. Let's get right on into it. All right, let's pull up that screen. Oh yeah, top 6 stocks to buy in July. We'll have some price targets and give you some information about these 6 stocks that I really like and I've been buying, and I'm going to continue to buy in July depending on the prices and how they fluctuate. And we're going to start out with Meta, the big dog, formerly Facebook. I still call it Facebook. It's pulled down to 160 bucks, which I think anything under 160 is a really good buy. It ran up the other day and ran up to about 170. Last time I covered it, I think it was around 160. I really like it under 180, but I love it under 160, and I'll show you why. The chart on Meta is kind of screaming a buy because it's down here it's almost on support. There's some support from way, way, way back. I mean, from during the height of the fear of the Rona, which was right here in the 150s, about 155-ish in that area, and it's almost to there. So I think that's, who wouldn't want to go back to that particular day or week and pick up some stocks? So a lot of stocks are available now at that price, and Meta, being really one of the most profitable companies in the world, is now available at the price of that week. And if you look at the P ratio on Meta, it's at freaking 12, which is that's value stock on top of value stock. And the financials are fantastic. The company made $7.5 billion last quarter. It averages about 10, so that's one of the reasons why it dropped. But this is a company that does nothing but print money. And Mark Zuckerberg's getting pretty tough. I think, a lot of these companies were doing a lot of social experimenting during the last couple of years because they were afraid of their employees and things like that, which is understandable. It's hard to get anybody to work with the Rona running around. But now with the recession on us, which we're pretty much already in it, let's just go ahead and face it. These companies are dealing with some profit and loss pressures, and they're not going to sit here and watch their stock continue to go down. So they're going to make the tough decisions. And Zuckerberg said this: I think some of you might decide that this place isn't for you, and that self-selection is okay with me. Realistically, there are probably a bunch of people at the company who shouldn't be here. So he's probably going to go in there and kind of clean house a little bit and get some people back achieving goals like they used to, and get that P&L looking even a little bit better. I think he's kind of seen the handwriting on the walls. And actually, I've got a little video of the actual meeting where he said that, and here's Mark Zuckerberg discussing it.
Go on, get out of here. Go on out the garage, leave me be.
Yeah, I think he's about had it with that. So, like I said, I've got a good feeling about Meta long term. It's the PE ratio of 12, for gosh sakes. One of the most profitable companies in the world, and it's just screaming value buy. So I'll be picking up some more this week. It's actually my second largest holding behind Walmart, and I've held Walmart forever. So, like I say, Meta is one that, and I feel real good about the metaverse. I think that's going to wind up being very successful. Now, you may not agree with that, but the company by itself without the metaverse is still unbelievably valuable. So to me, this is a good buy. And of the 37 analysts that are out there, the average predicted price over the next 12 months is almost about 267. So you're looking at a really nice return of about 67% if they hit that. And I think that's perfectly reasonable. And the next stock on the list is Palantir. Now, this is a company that, man, you're talking about a company with juice. This one has got growth like crazy. They're expecting growth for the next several years at 30%. And this is a company it's not GAAP profitable, and GAAP means generally accepted accounting principles, but it is cash flow positive. The reason it's not GAAP profitable is because you've got some big cats up there, or the fat cats, if you want to call them that have been really taking care of themselves with stock-based compensation, and it's really been a problem. They have recognized that problem, and they're working on it, and that number is coming down. And if they get that down number enough with the growth they've got going, this thing will become profitable without too much trouble, and probably become very profitable. Because remember, this is software as a service. Palantir is artificial intelligence using information to help companies become more efficient, more productive, and more profitable. And they've got a nice moat, an information moat that they've been collecting for years, and their software has been really pretty well perfected at this point, or getting close to it. And I really like this company long term, and it's sitting at a nice price. As you can see, it's sitting at $9.27, and I started picking this up at 12 bucks. I missed it on the run, and I didn't chase it. It started out at 10 bucks, and now it's actually under where it IPO'd. and it ran up to like 30 or 40. And when it got under 12, I got real interested in it. And under 8, I love it. So I bought some under 8, I bought some under 12, and I bought some under 10. This is not a bad price, but if it drops under 8, I'm all over it like a duck on a June bug. And your stock analyst, there's about a dozen of them. They've got it at $11.32 with about 22% upside. I think that's a little low. I think this thing will be 13, 14, 15 within 12 months without too much trouble. Long term, this is a $30, $40 stock. They got to get a hold of that freaking stock-based compensation, though, because it dilutes the company, it dilutes the shareholders, and it sucks. And it is nice they're finally talking about the stock-based compensation. Most companies won't do it at all. Trying to get information out of the top dogs at a company over stock-based compensation is almost impossible. It's kind of like this.
You want answers! I want the truth! You can't handle the truth!
Yep, it's a lot like that. They don't want to tell you. But at least Palantir is speaking to it, and they're working on it, and that's a huge step. Like I said, most CEOs, they will not do it. They just won't. The next stock on the list is NIO, which is an EV company in China. I cover it all the time. I really like NIO long term, and listed in my best stocks to buy several weeks ago, and I was buying it under 16, and it did run up to 24. It has pulled back, like I said, I thought it would, that it'd pull back to this support in the low 20s, and it's pretty much done exactly that. And we'll see if it holds or not. This is a great buy to me under 18. It's a good buy under 20. Right now, it's probably going to meander around this $21 area for a while and kind of sit on this support if I had to guess. And this company had some real nice deliveries in June. It did almost 13,000 vehicles, including 4,000 of the new ET7, which is a $70,000 plus dollar car. And they have been dealing with the Rona shutdowns in China, which will not work. It's galactically stupid. But they continue to sort of cling to it. They have been reducing those restrictions, and I think that played a role in why these numbers were quite a bit higher with deliveries. And hopefully we're done with this, but with China, you never freaking know. But those numbers were definitely hot. The analysts are coming out with a price of $33 and change, which is about a 56% upside out of about 11 analyst ratings. The low is 25, which is above what it is today, and the high is $48. So the analysts love this stock, obviously, but you do have to take into consideration it's a Chinese company, and there's always the issue of delisting, and the Chinese government's saying all the right things about it, but the SEC has said, you can say all you want, we need to see those books. And that's good because every investor needs to know that the books have been audited. I'm a big believer in auditing. Hopefully that will be taken off the table after a while, and we'll all be taken care of, but we'll know more over the next few months. And this company, of course, just got hit by a short report by Grizzly talking about, oh, they didn't really deliver all these vehicles and the batteries, et cetera. And they pretty much attacked that report and pretty much said it was crap. And also JP Morgan did the same thing. And Grizzly Research is known for these short reports. They wait until a company runs up, like NIO just ran up 100% from $12 to $24, and then they put out the report, which was the ideal time to do it, try to make a quick buck, and then they move on. Pretty much JP Morgan and NIO did this with Grizzly Research. Yeah, they were not real excited about it, and didn't think much of it. Grizzly does this. I've had to deal with them on stocks before. We're getting ready to cover another one that had to deal with them about, I don't know, 6 months ago or something. They dealt with them about the same way. MP Materials. Now, this is a company I really, really like. Their growth has been outstanding. It's just tremendous. When you look at their financials, they're just crazy good. And realize MP Materials is a mining company in North America. It's the only one in North America that mines the 14 rare earth elements. It's incredibly important to this country. We need those minerals to build the magnets and the batteries that you're going to need for your EVs and every kind of product that you can imagine. And realize they've got a huge moat around them. It takes about 7 years to build a mine in North America, and understand they bought it out of bankruptcy, so they have almost no debt. If somebody had to reproduce that mine nowadays, they would have so much debt on them, it'd be crazy, whereas MP does not. So their moat is gigantic, and they're actually working on processing those minerals themselves, which will be another profit center for them. When you look at their profit and loss now, it's pretty impressive. As you can see, they did $166 million in the first quarter, $85 million of which was net income, which was up 430%, which is, I've almost never seen that, a company this size. It's one of the most outstanding P&Ls I've ever seen. Their operating income was up 429%. Their revenue was up 177%. So they're really kicking butt. The one negative on MP is it's a little bit overvalued based on a trailing PE of 29, but realize that's a trailing PE, not a forward PE, and it's not taking into consideration the huge growth that this company is experiencing, and it appears they're going to experience in the future. So this is one company I don't mind having a high PE given the growth rate that it's at, because I've never really seen a company this size with that level of growth. And as I told you, they got hit with a short report. I guess it was 6 months ago or something. It pretty much didn't affect them at all. And this is pretty much how they responded to it.
You can't stop me no matter who you are.
All right, and the next company is the mighty Ilus. Now, I'm going to go ahead and warn you, the last two companies that I'm going to cover are penny stocks. Penny stocks come with their own risk level. So let me bring out my assistant to give you a proper education on penny stocks.
Danger, Will Robinson. Danger. No, Will Robinson. Danger.
That's right. Danger, Will Robinson. Always remember that with penny stocks. But these are two that I like, and I'll show you the reasons why. Now, Ilus's revenue has been going up dramatically. This is a mergers and acquisition company that actually has about 8 companies under its umbrella, and they're adding more as we speak. And again, this is a profitable penny stock company, which is pretty darn rare. And their revenues were pretty much skyrocketing. They are missing 4 companies from this actual number because they're in the middle of doing a spinoff that they are saying is going to uplist to the NASDAQ, and how that's going to be treated with their accounting, some sort of consolidated accounting, which is not included in this. And we're going to get an update this week, and hopefully they speak to that. But again, they have good, solid net income. As you can see, every quarter has been profitable. The last quarter, even though it was down a little bit, realize that's a 20% profit margin, which I love. That's the thing about fire and safety, which is the sector they're in. It's very profitable because the simple reality is you have to have it. It's like an electric bill. You are not going to have a building or anything that deals with the public that doesn't have fire and safety, or they will shut you down. So you must have all of these products that they sell. And they are growing, and their goal is to also uplist Ilus to the NASDAQ as well as the spinoff. So it's going to be very interesting to watch this stock. Now, Ilus had a big run up back during when the penny stocks ran from 5 cents all the way up to 45. It has pulled down to a really nice level as far as purchasing, and it's sitting on some real good support right in that area. There's a little buying corridor that I like between 7.5 and 10 cents. And I have bought some at 11, and I bought a bunch back at 5. So I'm comfortable right in here. Now realize penny stocks have really been hammered almost too much at this point. If you look at the Yardeni P&E ratios for small caps, you can see they're at basically the lowest level they've been in almost forever. Really at the height of the fear of the Rona, and including almost as low as the disaster we had back in 08. Which was one of the worst stock market times in recent history. But you can see it's down that low. And when your PE ratios are averaging around 10 instead of the normal level, which would be around 16 or 17, there are some good buys out there. And that's one of the reasons why penny stocks are so low. They're very similar to small caps, you know, even though they are obviously a micro cap. And the last stock today is Cybl, C-Y-B-L. It stands for Cyberlux. And this company is mainly known for their LED lighting they sell to the military, but they've also started selling software as a service and platform as a service, which is very profitable. And this, again, is a profitable company. And I will tell you the good and the bad of this company. The good is pretty obvious. They've got a real nice profit margin on $6.2 million in revenue. They wound up with an income of 1.5 and 1.2 after taxes. So that's almost 20%, which is outstanding. For a profit and loss statement, and they did $6 million first quarter. They're thinking they're going to do $44 million is what their target is for 2022. So they're looking for huge growth in the second, third, and fourth quarters. So that's really nice. They've got a solid balance sheet. It's not a great balance sheet, but it's pretty darn good. Nothing to really get upset about. This company has also announced they're going to do a $19.5 million stock buyback, which is very significant for a company of this size, and they plan on doing that over the next 3 years out of cash flow, which it appears they're going to have the cash flow to do so. So, we'll keep an eye on that. The big negative on this company is that the OTC market has put a pink limited information on them. My understanding, and I've heard this from several people that also own Cybl, that they've been growing at a pretty good clip, and they sent information to OTC markets, but they were not satisfied with it. So they have resubmitted that information, and you can see it right here in an amended quarterly report and an attorney letter with respect to current information, where this attorney states that he believes that it is current. So OTC will have to agree with that, but that is a negative for this company. But that negative has been priced into the stock price. So this might be an opportunity if this thing jumps. And I've actually bought this stock in my regular account and in my Roth IRA account. And if it does pop, if they get current, I will let that thing run in the Roth. I will probably sell it, take some profit, and then leave the regular account alone. And if you don't have a Roth IRA and you ever do any swing trading, you really ought to get one. And there's some great videos out there all about Roth IRAs on YouTube, and it's worth the 10-minute time that it takes to actually learn about them. And like I said, if you're swing trading, if you're day trading, you have to have one. But if you're swing trading, you really should. And you ought to have one anyway. You ought to max out your tax advantage accounts every chance you get or every year you get. But, that's up to you. But I can't imagine not having one. All right, folks, that's top 6 stocks to buy in July. And woo, that was a long one. That's a long video for me. But these are 6 stocks that I really like. And I'm just looking for pullbacks on them to where I can add to my positions, because I just think these 6 stocks got a lot of juice. And I've kind of covered all the bases, everywhere from penny stock to a FANG stock. And if you like this content, be sure to hit that like button. Lets me know to continue to cover. Lets me know to continue to do these style of videos. And if you haven't subscribed, hit that subscribe button. I'd certainly appreciate it. And we'll see you next time on Mr. Frugal Investor.